the equity platforms or the investment platforms also. Now, earlier we had only direct equity. Now then mutual fund, the entire that tsunami of investment, the mutual fund thing came in, followed by PMS and AIF. So what's the difference between these three platforms, particularly mutual fund, PMS and AIF, and how they differ from each other? Your view on that?
So essentially, these are three platforms or three licenses given by SEBI, wherein you can invest in debt markets, you can invest in equities, you can invest in private equity, you can do a whole bunch of things through these three platforms. Right now, mutual funds are conventionally one of the best platform uh, in terms of ease of transaction, in terms of understanding of the product, in terms of risk diversification. And I think our regulators have done a tremendous job in ring fencing the mutual funds to do a better job, avoid accidents, and give good experience in
Right.
terms of the investment journey. So that is about mutual funds, most conventional, very large globally, very large in India, and they'll continue to be that way. And anybody and everybody can invest, right from a 100 rupee SIP investor to somebody who wants to put 1,000 crores. Everything can be absorbed in a mutual fund. I think very beautiful vehicle, very efficient, tax efficient vehicle as well. Now, coming to PMS and AIFs. Now, broadly, we call both these um products as alternate to conventional investing, which is mutual funds. Now, mutual funds, for the sake of protecting retail investors, obviously there are a lot of checks and balances which have been put in place, right? But there are many investors who uh, have an appetite to take, who want one have an appetite to take higher risk, and two who have enough of mutual funds, but for the sake of diversification, they would want to invest in other alternate ideas,
Mm.
right? And in the recent past, as we are seeing that Indians are getting more and more prosperous, we are seeing that potential to allocate more money in alternate products like PMS and AIF is only increasing. And this data is suggesting, because in 10 years, PMS only listed equity has grown from 30,000 crores to 3 lakh crores. AIF's only listed has grown from nothing, zero, to about 70,000 crores. So we are seeing incrementally investors are willing to consider alternate vehicles like PMS and AI for investing. Now, PMS is what? Just like mutual fund, you give the money to the fund manager puts money into the markets, buys stocks, and you get your outcomes, you get your returns. PMS also takes money from investors, buys into stocks. The only difference is, in a mutual fund, you get units. In a PMS, you actually get stocks in your demat. So the ownership pattern changes from a unit holder to a shareholder, right? So apart from more focused portfolios, more boutique portfolios, more concentrated portfolios, high conviction ideas, the feeling of owning that stock, being a shareholder also uh, uh, gives some amount of thrill to our investors. Apart from that, because these are PMS specifically is a product where accounts are managed individually, so there is a lot more transparency in a PMS product. So if the stocks are bought and sold, you get to know over a period of time. There is fungibility in the fees. So a lot more transparency, lot more flexibility, and getting exposure to boutique portfolio. That is the difference between PMS and a mutual fund. And AIF again continues to offer similar features like PMS, but the way execution happens in a AIF is very similar to mutual fund. So in very simple terms, for the larger audience, AIF is nothing but best of PMS and mutual fund is equal to AIF. Right? So
Right.
you can get boutique portfolios, but managed like mutual funds. You become a unit holder of the portfolios. Now there are more advantages in AIF, like you can have a private equity like a drawdown structure, you can have structured way of entry, structured way of exits, we can create thematic portfolios, we can have open-ended AIF ideas, we can have hybrid portfolios, listed, unlisted, only listed. So a lot more combinations are available, but these are all now products for high net worth, ultra high net worth family offices, and depending on anybody's net worth, uh, you know anywhere between 20 to 40% kind of a allocation to alternate like a PMS AIF would be a very good allocation from experience perspective, right? So there is a myth that, or there are these questions which come to me many times, that if we are giving money to you in PMS or AIF, that means will you do better than mutual funds? So I want to clarify there that there is no guarantee that a PMS or a AIF will do better than mutual funds. It could be anything. After 5 years, maybe some mutual funds have done better than PMS, some mutual funds have done better than AIF, or vice versa, right? So you don't come here for higher returns than mutual funds. Maybe you make similar returns. The experience or that journey is going to be little.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.